Well, hello there. It's October 31st. It's Halloween, and we have jobless claims coming out in just a few minutes. It's about 8:12 right now. We got another 18 minutes. Here's the consensus. The consensus is about 215,000, and here's my opinion. Unless the number is really out of whack, I don't think it's going to have that much of an impact. Why? Well, because just yesterday, we're talking like less than 24 hours ago, we already got everything we need to know from the Fed. We already know they're going to lower rates. They're lowering rates, and we already know they're going to lower rates again, most likely, based on what we're seeing in the economy. GDP was slightly below estimates. So jobless claims, if it comes slightly better than expected or slightly worse than expected, I don't think it's going to make that much of a difference in light of the GDP and the Fed announcement yesterday. If this was in isolation, then I think it would make a bigger difference. So if we come anywhere within 205 to 220,000, don't expect much movement in the market. Now, the Fed announced they're going to lower rates again. The bond market started taking off, just as I expected it would. We were oversold, and we went up from there. Now, we're still below the 50-day moving average, and we may stall a little bit here, but I think we're going to go higher because I'm expecting the S&P and the broad market to begin trading a little bit lower and start hitting towards the 50-day moving average. Remember, interest rates and bonds are inverse. Fed lowered interest rates. That means bonds rally. So most of this action is already priced into the market, as you could see here. We've already this is what happened when the Fed initially started raising rates. So we're still substantially higher, but I think we're going to move a little bit higher, maybe go up to about the 145 level on the TLT, which tracks the long-term bonds. Now, with that said, right now tech is reporting. Apple reported better than expecting numbers yesterday. The stock looks like it's going to open higher by about $4, by about 1.68%, but I think the majority of the upside is done, and I think we're going to congest here and begin coming towards the 50-day line, which will cause more of a downside for the overall market because, remember, the market capitalization in Apple is massive. It's the largest company in the world, and it has about as much market cap as about a quarter of the S&P 500. I'm not kidding. Imagine 125 stocks in the S&P 500 moving higher, and imagine Apple moving lower, and imagine Apple being able to control that movement more than 125 stocks. That's mind-blowing. But that's how big this company is. It's a giant. It's just, this is a monster of a company. So Apple came out with better than expected numbers, and Google did not. So we're expecting to see, and guess what? Google also has major market cap. So you're seeing slight downside from Google and some major upside from Apple. So I think that's going to kind of neutralize the market. Overall, if we look at the technology sector, and that's where the earnings are headed right now, it is overbought. And the overall market, if you look at the Russell 1000, it doesn't have as many S&P 500 stocks. You will see that it's right now just barely breaking out, and it doesn't have that type of momentum. And there's really no catalyst right now to cause stocks to go higher. So I think we're going to revert back to the 50-day line, and the long bond is going to go higher just a bit. If you look at New York Composite, which is all blue chips, you will see that it's overbought right now, and it didn't even make new highs. It's just stretched out, and the Russell 2000. These ticker symbols are so confusing because the IWF, IWM, IFW, they're all over the place. But if you look at the Russell, you will see that it's peaking out too. So the only thing that's really holding us up is the large caps. It's just a handful of stocks in the S&P 500. And I believe based on what we're seeing right now with earnings, we're going to start seeing a little bit of a downside. Soft landing, nothing major, nothing to panic about. But I think we're going to see VIX, which is the volatility index, start giving us a little higher signal. It's near the lows right now. It's near 12, and this is a a good long-term low. As you can see here, we're right at the base. And typically when volatility goes to about 12, especially over the last several months, almost, let's see here, 8 months straight, this has been the low. Let me show you a little better indication of this. When I'm looking at momentum indicators, I like to look at line charts. And when I look at price data, I like to look at bar charts or candlesticks. So this is a momentum indicator. Notice here we're at the lows, and even if we go a little bit lower here, this is over 2 years. We're really near the lows, and usually when volatility and fear levels move down to this level, we see a reversion back up. So to summarize, Fed data telling us markets, economy slowing down. China, their GDP came out softer than expected, so there's a slowdown there. There's more pressure on China and U.S. to figure this thing out, this trade war out sooner than later. We already know Fed is going to lower interest rates, and they're going to probably lower interest rates again. They've already told us that. The earnings on tech stocks are slightly better than expected. And as far as the overall stock market, if you look at the growth stocks, we're overbought right now. We're sitting at old highs while we're right by the overbought levels. And if you look at the Russell 2000, which is the small caps, you'll see that it's even more overbought and already heading down. This was giving us support right here when we were moving back up last 2 weeks from the small caps. They were giving large cap supports. Now the small caps are moving down against the trend. So you're seeing large caps having a lot less support from the small caps and the medium caps now than they did a few weeks back. And that's going to play into the economy. And again, with volatility being near low for the last 2 years, this is near the low portion of the range. It looks like we're going to head back higher up close to 20, which typically happens when the S&P 500 reaches for the 200-day moving average. Let me go back and give you better looking data here. As I said, I like to look at candlesticks when I'm looking at price data. Yeah, it looks like we're going to revert. We're overbought. Notice here. Every time we go overbought, right here, February 4th, February 20th, April 5th, April 29th, June, July, right here. Every time, and it looks like we're there one more time, and it looks like we're going to be heading back down. RSI is overbought. I hate to be the bearer of bad news, but I think we're going to move back down to the 50-day and possibly the 200-day moving average. Again, I'm not expecting the markets to slide down. I'm not expecting this type of trading action that we saw a year ago, actually, during the holidays. I'm expecting, or close to a year ago, I'm expecting something I'm expecting price action to come right back down to the 50-day and possibly to the 200-day and continue this sideways trading action that we've seen here over the last year. All right, so again, earnings slightly better than expected. Expect Fed data to be right on par with expectations today as far as employment data. And after yesterday's Fed announcement and interest rate, lowering interest rates, I doubt that the employment data is going to have too much impact on the market. Keep your eye on Apple. Keep your eye out on Google. Keep your eye out on large cap tech stocks, because as soon as Apple starts moving lower, and I think we're literally like a day away, I think the market is going to begin softening again. Again, to clarify, not expecting a bear market, just some minor downside so the stock market can give itself a little bit room to breathe and cool off just a bit from being near all-time highs. Talk to you guys later. Have a great Halloween. Stay out of trouble.